This is Arias Back, Director of Partnerships here aside. Super excited today to be sharing just the next hour with the amazing Clelia Peters. Thank you everybody for joining us. I know we have our side community here today and we're really excited to just get started. So without further ado, I'm gonna do a quick introduction to Clelia and then we'll get started. Most of you may have, may be aware of Clelia, being really involved inside in the early days, but as the president of Warburg Realty, Clelia Peters oversees strategic business development and investing for one of the oldest and most well-respected real estate brokerages in the U.S. since 1896. So a lot of history, super prestigious brand. And in 2015, Clelia co-founded MetaProp, a prop tech accelerator business focused exclusively on real estate technology, and is now a venture partner at Bain Capital Ventures, where she's focused on prop tech. Clelia was one of Side's earliest investors and is now an independent board member of Side. As an editor-in-chief for Inman News and the host for Inman Connect events in New York and Las Vegas, we are extremely excited to have Clelia share the next hour with us. I know some of you have already submitted your questions, so I do have some of them in front of me. So Clelia, thank you again for joining us. So a couple of housekeeping items. For any questions during this session, feel free to raise your hand and join in the conversation. We'll do our very best to address them as we during this next hour. So just, to start off, Clearly, obviously with your background and your experience, one of the things I think it would be great to start off with is just kind of sharing a little bit more about kind of the current situation and lessons learned from the past and kind of your insights as the president of brokerage that's been around for over 100 years. You've kind of weathered many storms from the Great Depression to the 2001 dot-com bust to the '08 housing crisis. So what are some of the lessons that, you've learned from the past?
What a big fan I am of Side and the Side team. So I'm really delighted to be joining you today. And I would say, I think an important caveat for me in talking about the brokerage business is that I got into this business to working with my father. And so I really look to my father as the key expert I know around these topics. And I had a great exchange with my father recently where someone asked him about, what were the lessons learned? My father was running our company, in 2001 when September 11th took place in New York. Somebody said to him, how does this resemble or not 2008, 2009? And he said, this doesn't look like an economic depression. This looks like an alien invasion. So basically, we don't know what's about to happen. But I do think that we can take lessons from what we did in those prior economic disruptions. And I think the biggest one for both brokers and agents is really around resilience and positivity. This is a challenging period for us as an industry. I think it's going to remain challenging for the next few months, but that does not mean that it's a period where it's impossible to get deals done. And that does not mean that we're not going to come out on the other side of this in a position that is as strong or stronger than where we started just a couple of months ago. So, and actually there's economic data to back that up as well. And we can talk more about that, Alice.
Sounds good. And I think that mindset's everything, and the resilience and staying positive and kind of powering through changing times is something that it's so important, right? Because we have to be there for our clients and a lot of them lean on us, right? So, what are you seeing as kind of the near-term situation? I mean, do you think we're going to see some house prices drop? Do you think the unemployment, rates are going to affect, foreclosures? I mean, what are your thoughts?
Yeah. So, one of my immediate answers, I don't really know. I think that anybody who tells you that they know right now is lying. I think that this is a truly unprecedented situation. But here's what I do know from the analysis and the discussions that I've had. First is that in places where shelter in place is being really strictly enforced, we are going to see a reduction in transactions taking place. And actually, one comment I would make is, as a side board member, I happen to know that side is actually tracking well above the rest of the industry in terms of the number of transactions taking place on the side platform. And I think that has something to do with the existing all digital mentality at side. And I'm glad to talk about that later too. But, based on data that we've seen from Wuhan and China, in places where strict lockdown is enforced, there's a 75 to 90% reduction in real estate transactions. And I would say that that's what we're seeing in New York at this time as well, that we've basically seen a near total cessation of new closings. So things that closed, 30, 60 days ago, we're bumbling through completing now because New York had not been very open to and supportive of digital transaction closure in the past. And we're learning on our feet. But I think that in places where that has been supported, we're still seeing transactions closing, but we're not seeing as many new transactions originating. The other thing that I think is really important for the side, partners and agents to remember is that there's going to be a huge amount of geographic variability in this process. So what's happening in California is going to be pretty different from what's happening in Texas, which is going to be pretty different again from what's happening in Florida. So this is not going to be a one size fits all, even what may be happening from like county to county, I think what's happening in San Francisco proper is a little bit different from what's happening in like Marin. So I think you have to stay highly local and specific about your experience right now.
And that makes a lot of sense.
I think in terms of coming out of this, it's for me right now, I think it's very hard to say exactly that's going to look like. We've all been hoping for kind of a V-shaped recovery. I'm optimistic that it'll be either V-shaped, so basically like we'll reach a bottom and then we'll go straight back up, or it'll be kind of U-shaped where we'll reach a bottom, we'll kind of dredge along there for a little while, and then we'll go back up. And I think if that happens, if we see employment return, if we see the stock market rebound, I actually think that we will see home prices remain relatively consistent. And, there's data that supports that. During the SARS pandemic in Hong Kong, they also had a pretty strict shelter-in-place order enacted during that time. And somewhat, to my surprise, at the end of that period, when economic activity resumed, housing prices did continue to drop, but they dropped in line. Housing prices had already been dropping in Hong Kong at that time. So it basically just stayed on the same trajectory that it was on already. So I think a question for us is going to be, do we come back and see the market performing similarly to the way that it was performing before? Is it almost going to be like we've gone through an economic pause? Or are there a number of factors which cause people to behave differently? Does the stock market, really change its behavior, and we actually see prices like meaningfully change?
Yeah, and it's nice to be able to kind of look at. SARS is something similar, right? To it was definitely disruptive and kind of paused the economy temporary. But it's good to see that the data is supporting that. The recovery is going to be there, and it's and it'll be interesting to see what happens. So, what do you think? As far as trends and advice for our agents, are we going to see trends where top producers can seize the opportunity and actually thrive during the next few months, and kind of are we going to see some trends emerge, right? Like new ways of connecting with clients? Is there going to be a footprint that's going to last, from this experience?
So let me just first share with everyone who's listening who may or may not have heard me talk about this, for instance, Inman in the past, my particular perspective on what I think is going to happen in the brokerage world over the course of the next 5 to 10 years anyway, because I think that what we're going to see this do is maybe accelerate some trends that were already taking place. So it's my particular belief that we're in a period, we've been in a period of pretty meaningful change in the brokerage industry already. And that there was already a trend where we were seeing new and different platforms like iBuying or different platforms that kind of serve to disintermediate. So by disintermediate, I mean like take the human agent out of some aspect of the transaction. And I do think that we'll continue to see that trend. I think one of the things that we've also seen here is that, as everyone will know, iBuyers completely have pulled out of the market.
Right.
And their models, the algorithms that they're using to buy homes, like they're not well suited to these type of disruptive events. Even though, ironically, this would be a period in which you could imagine a lot of people being interested in selling their home to an iBuyer.
That's right. Yeah.
But they don't, they don't have the ability to sort of model risk or understand the implications of what's happening. So their model actually doesn't work in a market environment like this. But I do think that we will see iBuyers come back and that will continue to be a trend in the market. I also think we're going to see a growing trend of integrated services platforms in kind of the middle layer. And by that, I mean models where I think we'll see more and more models where agents are employed and where they engage in the home sales transaction almost as not necessarily a loss leader, but as part of an integrated transaction model where they're also trained to sell home insurance, mortgage, and title products. And those companies will make their money from sort of aggregating all of those transactions as opposed to focusing on just brokerage. And then I think that we have been entering into for a little while, but perhaps this is going to even accelerate what I see as like a golden age for top agents. Because I think that, there are going to be fewer agents nationally, fewer independent contractor agents because of these different trends. But for those who endure, it's going to be a period where people take the agent role more seriously, where there are more and better tools available to agents. And I think that some of what we're seeing now, and this, across the board, I think Corona is pushing us to look at what sort of infrastructure and digital systems we have in place. And again, I mentioned at the beginning that as a board member, I happen to know that Side is like meaningfully outperforming the market overall in terms of transactions that are being originated and closed during this time. And I think that's because Side is the best digital end-to-end platform for transaction management in the business. And Side has always been really focused on ensuring that that technology was there. So, first of all, I would say to everyone on the call, I think you already made a good choice in terms of future-proofing your business or ensuring that you are well positioned for this type of disaster by being at Side. I actually think the agents at Side may be the best positioned agents in the country to maintain their business at a level similar to what was happening prior to coronavirus. And I'm not just saying that because I'm a fan of Side. I'm saying that because I have a pretty deep understanding of the landscape. And I think that the ability to manage transactions in a way that is, less reliant on human interaction on the back end, Side is uniquely well positioned to compete in a market where that's a core competency. And then I think this opens up an opportunity to, connect with your clients in a different way. I think this is a very human and vulnerable moment for all of us. I've actually enjoyed having the opportunity to connect with a lot of people who I primarily have a professional relationship with in this way that is more intimate, where maybe you're, streaming from your home, or in my case, a rental house outside of New York City. You're maybe seeing people's children or hearing people's children. Many people have been affected directly, personally, by this disease already, particularly in the areas where side works or where I'm coming from. And I just think it's sort of, it's allowed for a different depth of connection if you pursue that. And what I would really encourage people to do is to show up in that way in their relationship with their sphere and existing clients right now. To show up as a person first. And I think this is a powerful moment to reach out to check in on people, to do things that are, to like shoot an email, even to write a note. I think that social is really a powerful tool right now. I feel like I'm relying on social more for my feeling of community and connection. So for those who already have an active presence on social, I think it's a powerful time. And again, I think one of the things that you can really do right now is reinforce almost like your humanity. So I would focus with a social, with the content you're putting out on social right now, dial it, like the salesmanship down. And the like humanity and connection up. And I think, you can do that by sharing about your own experiences in ways that are vulnerable or real. You can do that by showcasing people in your community. You can do that by actually like providing resources for people in the community to support others who might be harder hit by what's happening right now. I think there's a lot of ways that you can show up authentically in a way that doesn't feel salesy right now.
Yeah, and that's really, really important, I think, in these times. I think people will remember, right, how you treated them during these times, and to focus less on transactions and really just reinforcing the real relationship and staying connected and being there for your sphere, right, and people, right, and being empathetic. I think that's really good feedback. So I know, because a lot of our partners had a lot of listings coming on the market, or listings that have been on pause, and buyers who are kind of in motion. But I'm just I think a lot of the agents are very curious on advice on how do we keep these buyers and sellers engaged and in motion, obviously without being too salesy, but how do we how do we make sure that Q2 can be can be as best as it can be, right? Because we are looking at April, most of April, at least in San Francisco and in the Bay Area, it's going to be in shelter in place. So how do we come out of shelter in place and just maximize kind of the opportunity?
Yeah. So, I mean, let's talk through a few different almost like types of customers. I think there are sellers who currently have listings online. In that case, to the degree that you can right now, I think it's great to encourage sellers to leave their listings online. I know that there are people who have, been pulling, or in New York, we have actually stopped the days on market clock. I know that hasn't happened in California. I think there's a sort of debate about whether that's the right thing to do. But I think that consumers are going to be really forgiving about days on market right now. And I do think while traffic to sites like Zillow or traffic is down, but the time that people are spending on the site when they're on the site is up. Longer. So, you may have fewer kind of looky-loos, and more people who are now really thinking, either because they think this is going to be a moment of opportunity, or because maybe their financial circumstance feels different, like we may need to move in the next couple of months. So I think that keeping inventory up there is smart, and I would encourage you to work with your sellers to maintain inventory at this time, like in terms of a web
visibility
presence.
Right.
Yeah. My personal belief is that we don't yet know what's going to happen with pricing. And I think that we're not going to see that many transactions actually taking place in this period. And again, I think there's going to be variability around that depending on what shelter in place means in the particular area you're in and what you can safely do. And let me just give a little more color when in New York, most of our transactions take place in buildings. And at this point, buildings are saying, we don't want agents coming in,
Right.
to show an apartment. Like the risk for everyone in the building is too high. So we are basically not showing at all in New York unless people have, they're showing a townhouse or, but, in a situation where you have a standalone single family home and, whether it's occupied or unoccupied, you can take some serious precautions to protect both, the buyers who might be visiting the home and the sellers. And there's real urgency on both sides. There's a reason why people consider real estate an essential service. And for a lot of, for the people who are transacting right now, generally there's some urgency. And I do think we're providing a service to them if we can find ways to safely show up for them. I know I have to say, this is a matter of some debate. I moderated an Inman town hall last week, and there were people in that community who felt really strongly that actually no showing should be taking place at all right now. That, we really need to cease any activity that could increase exposure in any way. I think I fall somewhere in the middle here. And I think to the degree that it's happening, it needs to happen with really rigorous safety precautions in place. But I do think there are some people who feel a lot of urgency to transact right now, and that we should continue to support them if we can do so in a way that we think is safe and appropriate. We talked in the past, Alice, about VR. And my personal feeling, though I am open to be proven wrong by this Corona experience, is that the purchase of a home is such an intimate experience that most people will not purchase a home, even an investment property, based purely on virtual tours. With that said, I think that many people will shorten a list or rule properties out based on a virtual tour. So what I can imagine happening more, and may actually become more of the norm over the course of the next year or so, during a period where I think we will continue to have some degree of social distancing in our minds, is that VR is used as an initial screening tool. And as opposed to going out with your buyers who are going to look at like all 10 of a list of properties with you, maybe you've actually gone through 10 VR tours with them. You've talked about the neighborhood, you've talked about the pluses or minuses, and then you've selected 2 to 3 properties that you're going to visit in person. I think it's much more likely that we'll see VR used that way than that you'll use VR to make a final purchasing decision.
And that makes a lot of sense, yeah. Because I think that the virtual aspect, like you said, buying a home is just such an intimate, it's emotional, and people like to be inside the home. So I think that it will narrow down, right, the search. Maybe kind of agents will work with clients deeper, show them virtual tours of homes, and narrowing it down, to 2 to 3, and then seeing those in person, and just being more efficient with time too. So I think that makes sense.
Yeah. Then I would say there is a class of sellers who are considering listing today. Broadly, unless people feel really acute urgency, my personal belief is that today is not a great time to list. We usually see a really big bump in terms of attention in the first week or two that a listing goes online. And I think that it's possible that you lose that. It may be a little different in California right now. I need to give the caveat that I think there's more activity taking place in California than there is in New York. But, I think this is an area where each agent needs to think really thoughtfully about what is best for their sellers, and should be focused really on, the longer term relationship. I think rushing things to market right now is not necessarily going to end up in expedited transactions. And, you know, with buyers, what we're seeing is there are buyers in contract who are getting we're seeing a lot of cold feet from buyers in contract. And, you know, you're in California in particular, your closing process is a little faster than ours in New York. So you may be at the tail end of the wave of buyers with cold feet, because most people will like probably have completed a transaction if they started it pre-corona. But because our process tends to be more 60 to 90 days in New York, we're seeing a lot of people who started a purchase process in a different world. And I think it's really important to meet your buyers where they are if they're having that experience. You know, we have not seen in New York any situations where people are getting their deposit back, or, you know, this is not, like, in my opinion, a contract breaker in most cases. But I think you need to meet your buyer where they are if they're thinking about breaking the contract or walking away from their deposit. You know, and I shared a story with Alice yesterday about a friend of mine who had just bought a brownstone that was supposed to close 2 weeks from now. They purchased the brownstone in early February. And, you know, in New York, that's like a multi-million-dollar purchase. And they are feeling extremely anxious. You know, one of them works in the art world. One of them works, you know, also in an affected industry. And I think they're having this moment of, like, did we make the right choice? And they went to their agent to express concern. And the agent basically said to them, the contract was already signed. I haven't had a single client like terminate a deal, and basically shut down the conversation with them, which is, you know, unfortunately, they were not working with one of my agents. So this friend called me to be like, is that true? You know, and there is some truth in that in most cases, we're seeing people move forward. And if people people truly don't want to move forward, they need to be prepared to walk away from their deposit. We are seeing a little bit of negotiation about price, but, like, not that much. I would say about 5% on average with things that are already closed. And, you know, maybe 7 to 10% at the outer bounds. But I think it's really, you know, what I'm aware of is that whether this transaction happens or not, my friend will not work with this agent again, because my friend basically felt like the agent, like, shut them down in this moment of great anxiety and need. And I think it's a real lesson for all of us that we have to seem more interested in the well-being of our customers than interested in closing a transaction. I think that is good advice for an agent always.
Always.
But
always.
now,
yes. Now
more than ever.
Yes.
And I think you have to take the time to meet your customers where they are. I think you have to take the time to explore their concerns. And I think that, you know, just as the behavior of this agent, I think, will almost surely mean that my friend doesn't work with them again. The flip side is also true, that people who show up for their clients and customers right now, I think that's going to be an even deeper bond than the bond that usually comes from delivering good service.
Absolutely. I can't agree anymore. I mean, this is at the end of the day, it's a people business. So the amount of care now, I think, matters more than ever, and being at their corner, right? And listening and understanding, you know, how they feel is so important. Let's shift gears a little bit, Clelia. I know in these times, there's a lot of questions around marketing. You know, as a top producer, should I increase my marketing spend? Should I evaluate my real estate business and kind of look at marketing and make adjustments? I mean, what are your thoughts there? I mean, obviously there's less activity right now. You know, what are your thoughts on marketing and kind of budgeting for the business?
I think that I'm kind of of two minds here. first, I would say, I think everybody needs to be cautious during this period. We're not sure how long it's going to last. And I think that particularly if you are a side partner, you're running a team, you really need to move into a bit more of a like wartime CEO mentality where I think a peacetime CEO should be focused on delegation, on growth, but a wartime CEO needs to be thinking about relentlessly focused on survival. um, and I think you need to be holding any marketing dollar you spend to an even more rigorous test of value than normal. Normally I think there's a lot of, I believe in experimentation. I believe in giving things a little time. I don't think now is the time to do that. I think now is the time to really focus on the things that are delivering value in this environment. And that's going to vary team by team and agent by agent. With that said, I think there are a number of things that are relatively low cost but high yield. As we discussed, I think that social is probably the area of greatest activity or greatest potential right now. I think that a lot of people are relying on social. I think that providing information, connection, and community, and again, that could be, as I mentioned before, information about what's happening in your community, support for small businesses. I think that's meaningful for people right now. And then I think that this is a moment where just the human touch is really, really meaningful. So, checking in with people, if you have clients who have kids, check, how's it going? Just thinking of you, clients who are older, can I do anything for you? Can I bring, I think this is really a moment where it's more about connecting human to human than it is in a, focused on the transaction. And again, I think that doing that authentically, people will remember that.
I love that. Be a wartime CEO and just be authentic. I mean, that's super good advice. So do you see new technology emerging during this new environment? I mean, obviously Side has already been, supporting kind of virtual transactions since day one. Are you seeing new emerging technology that agents should be a part of? Obviously there's Zoom and there's virtual meetings, but are there, Zillow had their 3D virtual tours that they've been pushing. So are you seeing any new technology out there that you think will be emerging in this market?
I do think that we're going to see different, I think people are going to experiment with and find their favorite VR technology. They're going to feel pushed to do that in a way that they haven't previously. I have a lot of agents who had never been that interested in Matterport who are now really engaging with Matterport. And so I think now is a great time to do a little bit of that, exploring and experimentation. Again, for most brokerages in the company right now, or in the country right now, this is a moment of an incredible scramble to try to bring as many transaction processes online or to make them more digital. And I think that for the majority of the brokerage industry, that's what they're focused on right now. So again, Side as a company and Side agents are in a very different position because that's what Side has been building for a number of years now, and extremely successfully, I think, compared to anybody else. So I want to have some great undiscovered ideas for you guys, but I actually think that most of the industry is going to spend this period scrambling to catch up with or build things that are almost like a poor imitation of what already exists inside.
And it sounds like even technology like Matterport, it exists, right? It's just now agents are adapting, more agents are engaged with existing technology that supports VR. So let's talk about kind of what investors are seeing. Obviously, you being an investor, who are the industry winners and losers? Maybe a little bit, obviously you mentioned iBuyers have paused, right? what are the long-term opportunities, and where do you see side among the landscape of prop tech? I mean, kind of in that area.
Yeah.
Would love your thoughts.
I feel like I don't have a crystal ball here on the long-term winners and losers, because I think that it's going to be very different. I think the shape of the recovery is going to make a meaningful impact on how people endure through this. That there are, some younger companies, for instance, a company like Opendoor, or, the Zillow iBuying program seemed very well positioned in January. I think if we have a pretty sharp V-shaped recovery, they'll remain well positioned. But if there's a lot of uncertainty and instability, and it's hard for them to stand their algorithmic assessment of home value back up for a while, that could seriously disable those companies for a while to come. So I think we'll see. There are some things that any tool that's helping agents engage more digitally right now, I think is a tool that's going to see a bump. So Zoom is an obvious one, but I think, for instance, Notarize is also going through a period of enormous growth, because e-notarization has become a key aspect of a variety of different business processes, but clearly digital closings. And for instance, in New York, e-notarization was not legal previously, and the governor signed an executive order to allow it to take place during this period. But it's not I don't believe that's going to go away after Corona. So I think you're seeing some processes that people had been resistant to bringing online, suddenly coming online very quickly. And I think that, again, there are several other companies in the market that are really focused on supporting digital transactions. And those are companies that are seeing a bump right now. But for side agents, you guys already have a best-in-class system doing that. I also think that it's a period where, to quote Warren Buffett, when the tide goes out, you see who's been swimming without their shorts. I think it's a period that there's going to be even more of a focus on profitability and the kind of robustness of a company's decision making, their margins, and again, I think that Side is a company that's very well positioned in that landscape. There have been a number of new entrants in the market in recent years who I think have pursued a kind of growth at all costs model, and I think that was a model that was working very well even 6 months ago. Already after WeWork, we've seen a lot of pullback from the venture community, but I think this is, nobody is looking to fund a company right now that is paying for growth at the cost of margin. And I do think that is going to be painful for some companies that have really built their business model on that assumption.
Yeah, and I think that makes a lot of sense. I think, looking at, I think investors are more than ever looking at the margins and the health, of these business models. One of the questions I think, a lot of the agents had was, what are some immersion opportunities for clients? Are there any bright spots, would you say, for clients at this time?
Yeah, I think that, I made that point before about, I think it's too early if you're listing, you have a property listed to bring the price down. But I think we probably all know that if you had a very interested buyer, you would negotiate the price behind the scenes, right? Particularly if you have a motivated seller. So for people who feel financially secure in spite of what's happening in the stock market, this is a moment where there probably are deals to be had in the market. And, I think that for savvy, well-capitalized investors, now is a moment when you can probably get in and get a great deal. I am genuinely not sure if that is going to endure, right? I think there's a scenario where we move into, more of a genuine recession and we see prices meaningfully impacted. But I think there's also a scenario where we don't. And we come back out on the other end of this and prices remain relatively stable in line with where they were in the past. And in that scenario, then the moment to get a deal is actually right now.
There's some questions around REOs. Are they back? Obviously, with just the whole economy pausing, do you think the REOs is something that, agents, we have agents who've been through multiple cycles, so they have experience with REOs, what are your thoughts on that?
I have to say, this is a part of the market that I don't have as much exposure to coming from New York. But my instinct would be that that also is going to be somewhat dependent on the shape of this recession and the recovery. That I really do think we're in kind of like a freeze moment. It's like one of those games where everyone was like, stop,
pause.
Yeah. Right now, people aren't making, other than employment choices, people are not making radical choices to change core aspects of their life. Like, we are not seeing a bunch of foreclosure sales or,
right.
And I think we're not going to for at least the next 8 weeks. I think moving into the summer, we're going to have a much clearer sense of kind of like what the world might look like.
Got it.
We're in the middle of a crisis right now. Exactly. We're really in the eye of the storm. So it's very hard to see outside of the storm.
So we don't know what that recovery will look like yet at this time, right? Because we're in the middle of it. What about on the flip side, luxury market? Are we expecting kind of a different effect in the higher price market? Because we do have a lot of partners who focus on that ultra luxury high end and kind of luxury market.
Again, I'm not sure. The fact that the stock market had taken such a hit definitely often has more of an impact on the assets of a luxury or ultra luxury customer. But there were a number of people who got into cash. So I think it may also depend on, your particular customer. And, for instance, if we see the stock market has taken a big hit, it rebounds somewhat, but not that much. And then housing prices stay relatively stable or decline a small amount. Net, I don't think we're going to see that much. It's not going to increase in appetite, and I don't think it's going to decrease that much. But we could see a scenario where prices really start to come down, and there are people who are in a position to really take advantage of that. Or we could also see a scenario where over the long arc, this recession hits, people who are high earners as hard as it hits, on a percentage basis, people at, all levels. For instance, in New York, our luxury buyer is often in financial services, or historically has often been in financial services. And, if you're a hedge fund manager right now, unless you really predicted what was going to happen with the market, you are not in a position to buy a $20 million apartment. Whereas,
makes sense.
If you are one of the management team at Zoom, you may be feeling much more excited about buying a $20 million home right now. Yeah. I think it's going to be variable.
It definitely very different. No, that's so helpful. I know we have some questions from our agents. I know that this morning there was a big article on Inman about Redfin furloughing about 41% of their sales agents. What do you think are the implications? Or is that a sign of some brokerages kind of, cutting costs and restructuring the way that they're going to operate their business? We had a lot of agents who had questions around that.
Yeah, for today, I wouldn't read I don't think we know what that's going to mean about the long-term prospects of Redfin. I think that, Glenn Kelman, who I admire enormously, who's the CEO of Redfin, I think has moved into that wartime CEO mentality that I was talking about, where what he is doing is battening down the hatches to maintain cash for as long as he can, and to ensure that the company can, kind of come out in a robust place on the other side. And I actually think most real estate CEOs are making those choices right now. And that is that's the right choice in most cases, because in the face of uncertainty, caution is a very wise response. And so I think right now when we see, iBuying shutting down completely, or Redfin furloughing a serious portion of its staff, for now, I would say those are appropriately cautious moves. We will see over the course of the next, I think it's going to be 3 to 6 months, whether those moves move from being appropriately cautious moves into, actions that would end up being taken later that really were signs of much deeper distress.
Yeah, and I think you're right. I think that wartime CEO mentality and just being cautious in these times to be able to weather the storm, I think that's really important for all CEOs, right? Not just in this, in our industry. We had some questions from our newer agents around, being able to really help clients virtually, and specifically on virtual open houses. I don't know how much you want to touch on this, but a lot of questions around the success of virtual open houses and how to, if there's any best practices that you can share now that we've kind of taken the world, to a virtual world overnight. And, we want to be as efficient as we can, obviously being super careful and cautious. Vacant homes are definitely the focus for our agents as far as showing. Any thoughts on kind of best practices and, just making sure that, the client has, has a good experience virtually?
Yeah, so I think, again, I have to say, I'm not an expert on this because we haven't been doing it much in New York because of the restrictions that I mentioned. But as someone who spent a lot of the past few years engaging with a lot of different technological tools related to real estate, I think your point, I think we have to start with everybody's health and well-being. And I think that actually being explicit about that right now with everyone involved is great. I think that this, again, to a certain degree, is probably an agent by agent process. You have to figure out what works best for you. For some people that might be FaceTime, for some people that might be Zoom. I think tools like Zoom can be helpful because I actually think, the limitation of things like FaceTime are, I think keeping the players who would already have been around the table is helpful. So if you're the sales agent, you want to, I think, ideally have the buyer's agent join a tour. I think that can be helpful just in terms of keeping things moving.
Yeah.
What were you going to say, Alice?
Oh, I said that's very true. I mean, you want to make sure that you want to, just be cautious, but, I think the tooling is really important, as far as making sure you're using the best tool. I mean, FaceTime and Zoom are very, very different, right? And I think even being able to record them, right? So your clients can reference back to them. There's tips. And I think Zoom is making a lot of updates to their platform as well. So I think, a lot of the newer agents obviously they've never been through this, and they're like, what are some tips or best practices that we're seeing agents having success with? So that's really, really helpful.
Yeah. I know this sounds funny. The immediate things to come to mind for me are, you should practice, figure out what tools you're going to use. If you're going to be leading virtual open houses, I would go to the house. I would actually try out a few different tools. And I know this sounds funny. I would actually record yourself, take a video of yourself doing the tour before you do one. I think because this is new to all of us, investing time upfront to in having as, controlling as many things as you can control is valuable. And then, but I also think, as we discussed at the start of the call, that this is a moment when people are, we're all in this together. So people also are a lot more sympathetic to kind of you being human and vulnerable. So if you end up in a situation where you're doing an open tour, you have open house, you have technical difficulties, something goes wrong. I think remaining relaxed and human and funny, that makes a big difference right now. And then I think another thing I would say is if you're doing that, don't forget to keep your sellers in the loop about all the activity that's taking place. And this is a very anxious moment for sellers also. So maybe if you're going to do that practice video, you actually do that practice video and you send it to your seller and you ask them if there's anything that,
Feedback,
you feel like they feel like you've missed or, but I think really, communication and connection is everything right now.
It's key. Yes, that's great. Just a follow-up question on that from one of our San Francisco partners, Marcus. To stage or virtually stage right now, which is the best approach?
So, I personally am I'm a big believer in staging. But again, I would have a question about the risks that you might be creating for the other people involved in doing full staging and whether it's really necessary or worth it right now. So if you don't anticipate you're going to have very many people coming in person, is it worth asking so many different people, different people to deliver furniture, to help stage a home? I think that's a personal question, but that comes up for me. And the one challenge with virtual staging is obviously if you're doing, as we discussed, these sort of, open, video open houses, then you don't have a staged home. I personally am a big believer in staging in regular circumstances. But, what I would say right now is I think you really need to weigh whether, as I said, it's worth asking other people to engage, and even as I'm saying that, I'm like, by the same token, maybe for those people, you're providing a valuable service by allowing them to continue to have a livelihood. So, I think for me, I'm definitely thinking of the health of my community and the ethical questions that my behavior raises as the first screen for any decision I'm making right now.
Yeah.
And, so then I would say apply that screen, and virtual staging certainly is great these days. And, maybe that's a first pass if you have any questions when you apply the screen about, is this necessary? Is it an appropriate thing to do in terms of the health of my community?
Right. So again, you have to evaluate it case by case and depending on the situation. But I think that first screen of being just responsible and in these times is just, I think, the most important.
But can I just make one? I would just say, Alice, in general, I think that if you have a home that's not in great shape and you're showing it looking shoddy, you are failing as an agent. So I think in general, staging is increasingly an essential part of the service that we provide.
And I agree. I don't think I've seen a side listing that's not staged from my experience.
Well, that's because really, side is working with people who are really top agents, I think.
Exactly. Which is why I think they're starting to come up with creative ideas of how to work around the actual staging by doing it virtually. A few questions around interest rates. I mean, obviously they were lower, and then there was kind of a refi boom for a moment. And how is it propelling more real investments in real estate? I mean, that was a question that we had. Are low interest? I mean, is that affecting people's decisions at this time, or?
I think we're seeing.
What are you seeing?
Because of the delta between the stated interest rate and what banks are actually offering on mortgages, because banks are concerned about their own capitalization right now, I'm not sure that the mortgage rates that are being offered are enough to motivate an otherwise anxious and uncertain public to take the risk unless they have some other external motivation. In a market that was otherwise normal, would these rates be low enough to maybe motivate a certain percentage of people to, consider trading up or to buying a home? Probably yes. But given the other extrinsic factors right now, I don't actually think the rates are low enough to motivate most people to overcome their anxiety about the broader economic environment, other than people who have an acute need to transact. And I would be really curious to hear from your community whether they're seeing interest rates impact transactions. I'm not really seeing it yet. And part of that, again, is because banks just aren't passing those interest rates along in a pure.
Yeah. And I think that's what we're seeing too. I think the rates, the Fed rates, it's not, the banks are not, it's actually, I think rates have gone up, I think recently. So let's see if there's any other questions from the audience here. I don't see anything else, but thank you so much, Clelia. It was such a pleasure having you. I don't know if you had a chance to look at the chat, but there's been a lot of everybody loved you and so much.
I'm on my iPhone, so I couldn't see the chat.
Guy is Clelia, heart, and then you have Kelly Griggs, who's she can listen to you all day because it's just you've just been so helpful. And I think, back to a lot of your points here is, we're in the middle of the crisis, right? We don't know exactly, there's no crystal ball, but we as agents, today more than ever should stay connected with our clients. We should be resilient. We should really be cautious, right? And still, and just be there for our clients, be authentic and leverage social more than ever. So thank you again.
Can I say one last thing also,
Yes,
Allison?
please.
I really, look, guys, over the course of the past few years, I've had the opportunity to look at most prop tech companies that are in the market today as an investor, as an advisor and friend to those companies. And, so when you hear me talking and I'm a side board member, maybe you think, oh, she's biased, but it's almost, it comes the other way. I joined the board of Side because of the strength of my conviction about Side. And I think that this crisis is, I actually think Side is uniquely well positioned to support top agents through this crisis. And, for those of you who have joined in the past couple of years, you took a risk in joining a company that was a new company. But I think that you're going to see that actually that risk is going to have really paid off for you during that period. I am not just saying this. I think that Side is the best positioned platform in the country right now to support continued transactions. And I think that Side agents are going to emerge from this crisis in a better position than virtually any other agents in the country.
I love it. Thank you. Thank you, Clelia. Super, super insightful, and appreciate your time. And hopefully we'll see you soon. Take care out there.
Yeah. Thanks. Take care, everyone.